The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the May 29th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you now make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today you and I are going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 9 o'clock in the morning. That's right. If you are listening live, I would love to hear from you. You can give us a call at 877-927-6648. Again, if you're listening between 9 and 10, but you can always send me an email. Send that to steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, if you're inside our Tiger's Den, well, then any and every ping will do. The show will be replayed during the 11 to 12 time slot. I'll try to make it as pertinent as I possibly can. It's just a couple hours from now, so it should be pretty well in sync. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we begin our day with U.S. equity futures pointing to the downside. S&P's off 42. NASDAQ's down 173. It's 0.9% there. 0.7 for the Dow, 271. 1 to 4/10 for the Russell. That's a 29-point move. You've got the spot Baltics trade up at 14.21. If it closes at 14.23, maybe it's 22, but if it closes at 14.23, we will have a one-day rate of change at 10% or greater. Typically, when you get a one-day rate of change above plus 10%, you will get an overnight rally. Sometimes it begins when Asia starts, or maybe when Europe starts. It can even be earlier, or it can be even later, maybe around 6 o'clock in the morning. So you'd be watching for that at the end of the day. Over in Asia last night, it was mostly a bloodbath. You did have the Shanghai that was basically flat, up by 1.5, but you have the Hang Seng down 344, the Nikkei off 298. Over in Australia, it's S&P 200 down 101 points, 1 to 3/10% there. FTSE's off 48. DAX is down 220, a little over 1%. Gold's trading down $13. We are taking a look at the August contracts, trade out at 23.65. Silver's off about 7 cents at 32.08. Copper's down 6 pennies. Platinum's off $20. Palladium's down 24. Light sweet crude is up 36 cents, and natural gas is off 6 pennies. Over in the other commodities, soft commodities, you got wheat that's trading down about 0.8%. Soybeans off 0.6. Soybean meal down about 0.2, 0.5% for corn, 0.8 for coffee futures. Cocoa is the one that is trading to the upside. It's up 5% out there. U.S. dollar index is up 12 pennies. You got the euro down just a tad. We're going to take a look at the currency pairs out there. So let's begin by taking a look at maybe this chart here. So if we look at the daily equity futures, we already have a TD9 count and a Rhodes and a sell the D point top inside of the ES Mini. We did get a close below the bottom of its profile. That was back on the trade day of May 23rd. That was a one-hit wonder to the downside. I don't know whether we're going to get a one hit or more than that today, but if we do get if we get a close below 52.96, it triggers a potential profile change in trend. A second consecutive move below that tomorrow would, in fact, initiate that call. If we take a look at the ES Mini has a top. The NQ doesn't, but it will today if we get a bearish reversal candle. At the moment, we got a bearish engulfing, and as long as price closes below 18,940.50, you will maintain that bearish engulfing candle. That will generate a sell the D point top. That's a 1 to 2. Now you can see profile levels on a daily time frame that offer potential support at 18,680 and 18,508. The Dow Equity Future contract, it has a TD9 count top, hasn't really looked back much. It's trading lower. We'll have to take a look at my Dow charts to give you a feel for where that is likely headed to. And the Russell 2000 right now could be setting up an A to B equals CD pattern to the downside. Let's get rid of that A to B equals CD to the upside out here. It would look like this, so we could take a look at a potential price projection. That's going to be dependent upon whether or not price closes below 2044.90. If it does close below 2044.90, that'll give us a 1-to-1 A to B equals CD price projection of 2005. I am not saying if we close below 2044 that that's where prices are going to turn around. That's just simply the first price objective. Remember, in the A to B equals CD folklore language, only 60% of the time do the markets make that 1-to-1 move and then do something else. Otherwise, the other 40% of the time, they're typically making an expansion. The expansion here inside the Russell 2000 would be at the 1.272 level. That's at the 1982 area. And at the 1.618, it's 1951. So that's what's going on inside of the daily time frame charts out there. Let's go switch over to let's take a look at the spot volatility, since I did mention that. I've just got to find out, where did I put that? Fixed primary, here we go. So I mentioned a one-day rate of change above plus 10%. This chart here, what it does is it takes a look at one-day rates of change that are either above or below a minus 10% reading out there. The blue arrows are the ones that have one-day rates of change above plus 10% out there. Now we're taking a look at the cash index, not the ES mini out there. And if you note those, you'll see, for example, off of the high from April the 4th, we had a one-day rate of change that was 14%. What did we see the next day? We saw a bounce out there. It wasn't the bottom, but it was certainly a bounce that lasted for a couple of days out here. So it's just something to pay attention to. What you would typically see in the equity future contracts would you'd see Rhodes momentum indicator signals for a time frame such as a 30, which is typically the best out there. And if we get a Rhodes momentum indicator bottom pattern for all 30 minutes, that tells us you definitely are going to get some type of counter trend rally out there. But that's just something to be able to take a look at come later this evening. We don't know whether we're going to get that one-day rate of change or not. We do have the New York Stock Exchange. It's advanced decline oscillator. What that is the difference between the 39 and 19 period exponential moving average of the advanced decline line. The advanced decline line got back up towards its all-time high. It did this back in the May 15, 16, 17, 20-ish type area, and that is turned down from there. Does that have any meaning? I don't know. What it does have meaning is that advanced decline oscillator. It's been below zero. When it's below zero for more than 2 consecutive sessions, that tells us that the sellers are the ones that are in control. Now, if the market today moves down in this advanced decline oscillator reading down to the minus 150 level, you get it close below minus 150, that is where we get into oversold reading. You get down to minus 250, you get into the extreme oversold level. We saw that nice bounce, or rally I should say, that took place in the middle of April. What did we have out there? You had advanced decline oscillator reading that got down to minus 283. It's kind of like picture yourself in a pool, take one of those balls, push it down and try to hold it with your feet. You may be able to hold it for a while, but eventually it slips and it pops up and boom, it just simply pops right out of the water. So that's going to be something else to watch come the end of the day. So let's take just a moment here. We're going to a hard break in about 20 seconds or so. Let's see what's going on inside the ES Mini. We'll take a look at this. We get back from this break. Here's what we're looking at is the the intraday charts out there. Now, you do have a few bottom signals out here, but many have failed during the morning session. The 15 minutes got a potential Rhodes momentum indicator bottom pattern. The same for the 10. The 30-minute chart needs a bullish reversal candle. Right now it's a hammer candle, but we've got 16 minutes to go, so don't know what that candle is going to look like. But we'll finish looking at the equity futures as soon as we get back from this break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So you got the Dow Equity Futures trading down 275, Nasdaq's up 174, ES Mini's down 42, and the Russell's up 30 points. We'll take a look at the 30-minute time frame chart here for the ES Mini. So as you study this chart along with me, what is it that you notice out here? What is it that you notice coming from the high out here? Now, the Rhodes Momentum Indicator top, that's not what I'm asking about at 6 o'clock in the 5:30 in the morning come yesterday, but I am speaking about the profiles on the 30-minute time frame. What we can see is since then being 6:30 yesterday morning, we've seen price rally up to resistance, the top of a profile, or even the bottom of the profile. We have not seen price close above the top of a 30-minute profile. That's a pretty important level for those of you that are short-term traders to be paying attention to. Now, we have seen, by the way, right now, there's an A to B equals CD pattern to the downside. We have seen some TD9 count patterns that have unfolded. One unfolded last night. It completed at midnight. And then what did price do? It rallied right up into that red oscillator and change line. What's a red oscillator and change line? Great question. When that line is red, it tells us that we have a falling price oscillator. And when the price is below that, that says we have a falling price oscillator below zero out there. And at this stage here, and those are bearish signals out there. So when the line is red, it's bearish. When it's green, it's bullish. They can act as support or resistance. They often do. We can see here that the oscillator and change line has also been acting as resistance. So all rallies have either found resistance at the end of its 30-minute session at that oscillator and change line, or have not been able to close above the top of her profile. Now, it's 9:20 at 11:20, 2 hours from now when this show is being listened to again. I don't know whether a new profile will form out there or not. But right now, I can tell you where the oscillator and change line is at, and that's at 52.87. By the way, the top of that profile is at 53.03. But the truth is, we are now down below the bottom of that bullish structured 30-minute profile for what will be 2 consecutive sessions. And it's already proven to ourselves, even without that pattern, that the center of that profile is resistance. That's at 52.94. So key levels to be watching on the ES are certainly going to be the 52.88 level, 52.94, followed by 53.03, should we get any type of a rally. I am not saying we are going to get a rally out there. We have seen failures on a 60-minute time frame chart. Formed a nice TD9 count bottom. It did that here at 6 o'clock this morning. And we got a rally up in that red oscillator and change line just as we were coming on the air here at 9 a.m. So on a 60-minute time frame, that number is about 52.94. It's going to change as price moves up and down. But you can see how well this has acted as a resistance level. Price is trading below its TD9 count breakout area at 52.86. It's making its way back to a prior low from about 4 in the afternoon on May the 23rd out there. That swing point at the low is down at the 52.73.50, and at the high is 52.89. We are trading inside that right now. That would suggest to me that price will get down and test that low. That's at 52.73 out there. That's from the 60-minute time frame chart. The 2-hour chart right now is testing support. That's 52.86. That's its breakout level. The current candle does not complete until 10 o'clock, so it's got another 40 or 38 minutes out there. The 240-minute chart is back at a support area, and that is its bullish structured buy zone. The buy zone here is between 52.82 and 52.92. 52.83 for the 5-hour chart and 52.92 as well as its buy zone. So we are trading inside a buy zone. Those would be areas to certainly watch. What I'd be watching are the swing points that would generate on these larger time frames A to B equals CD patterns to the downside. Now that would be, and I'm sure it's going to be the same on both, that would be a close below 52.73.50. Let me just make sure of that. 52.73.50. Yes, it is. So if we see close below 52.73.50, let's just simply open up the 5-hour time frame chart. By the way, the bar that we are in right now completes at 2 p.m. out here for it. But this would set up an A to B equals CD to the downside. We could draw that pattern in just to give you an approximate price projection area. I'm just simply going to go ahead and move this line over to the highest high after that B point had formed. So assuming I can grab this thing. I can't. Why can't I? What's going on here, Stevie? Well, I don't know what's going on with my finger. Yeah, let's see if we do. Oh, my goodness. All right, let's try the old copy and paste. That's Control-C, Control-V. Maybe this will move it. There we go. So here you'd have an A to B equals CD pattern. If price closes again, this is the 5-hour chart we're looking at, below 52.73.50, and that would take us down to approximately 52.43. You can see at 52.16, that's where its TD9 count breakout level is in play. So that's the ES Mini. That's multiple time frames out there. We are at key areas of support. We do have Rhodes momentum indicator signals on the short-term time frame chart. So 30 and the 60 that we really focused on out there because they were the ones that were showing us exactly where any counter trend move ran into resistance. We've got a request. We can go take a look at the other equity future contracts, which we will, but I do have a couple of requests that are in. So why don't we start on those? And the first one came in this morning from Hector and Patty, and they wanted to take a look at the 5-minute charts for gold, the U.S. dollar, and so because of the data feed that I've got for the U.S. dollar index, I'd have to switch over to my black background charts, which I'm going to do for you in a moment out there. But with regard to those 5-minute charts for the U.S. dollar, I'm going to focus on the euro, the yen, and the pound out here. Because this, I can give you whatever kind of signals we might have, whatever kind of patterns might be present and so forth, where I don't really get that on the black background charts there. I'm just getting profile levels and so forth. So with regard to Goldilocks out here, so in the case of gold, what gold is doing right now, it is trading above profile resistance. That's at 23.66. And again, this is the August contract that we're taking a look at. So Hector and Patty, the first key level inside gold that you're looking at, this is from a 5-minute time frame, is going to be at 23.70.50. If price closes above 23.70.50, that is going to suggest a further rally. Otherwise, that's where its rally would end. Again, that's a 5-minute time frame. If we take a look at the euro formed a TD9 count top. That's what it did at 8:10 this morning. On a 5-minute basis, you are in bar number 9 right now. The bottom here should take place on bar number 9 or the bar following number 9. Now, on a rally here with the TD9 count pattern, on a 5-minute euro, you should see the euro bounce up towards 1.08. That says it would strengthen. That would say the U.S. dollar index would weaken. We take a look at the pound out here. When it comes to the pound, I don't have any real kind of pattern out here. I've got price trading, in essence, I'd say, between 157.12, that's its TD9 count breakout level, and at 157.28, that is a prior profile resistance. We are trading above. It's green oscillator and change line on a 5-minute basis. We're trading above profile out there, so it does look like it wants to make a run back towards that 157 level. As the yen moves higher, it weakens. The dollar would get stronger. Now, the percentage-wise, the euro is 57%, the yen is around 13%, and if we take a look at the Great British Pound, I got to change up this chart here. The template that's in place isn't that good right now. What we have here inside the Great British Pound is it needs to poke below the low of the last 5-minute bar out there. And that number, in order to do that, number is at 1.2736 to be exact. It needs to do that, Hector and Patty, in order to find or form a TD9 count bottom. Steve Rhodes with TFNN. Watch gold at 2370.60. Right back.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tigers Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back folks, just to finish off what Hector and Patty were looking for, they were asking about the 5-minute U.S. dollar index. So we can see right now is we are trading in a series of higher highs, a series of higher lows out there. And right now we're making a new higher high on its 5-minute time frame. It is trading above resistance out there. But let's go take a look at what's going on in the daily time frame. But to do that, what we've got is this chart. And right now, what took place yesterday was price tested and rejected the top of its swing point for May 16th out there. Now, I don't have volume or anything, but what we do know is when you test a swing point and you reject that swing point, which it did in this case here, it favors, odds favor a move higher. Now, where's resistance? You know, that 5-minute chart wasn't showing us any resistance. And Hector and Patty, that resistance is in a zone. Now, that zone is between 104.80 and 104.97. So the level to be watching right now, we are trading at 104.76. We're just a few pennies away from testing that first level of resistance up at 104.80 out there. So I do hope that that helps you out with regard to the U.S. dollar index. We're going to continue on with Goldilocks. John and Mr. Z inside the Tigers Den wanted to bisect and dissect the gold charts out here. So let's do that. These are not the set of charts that we're going to take a look at. We can go back to these, but we're really going to go take a look at the multi-time frame set of charts. So if you give me a moment, folks, we'll get over to that set of screens. You'll see 8 different panels here. You'll see the monthly, you'll see the weekly, you'll see the daily. Again, we are trading the August contract. That is the lead contract out here. With regard to a weekly time frame, we just have a good old-fashioned consolidation. That's had a TD9 count top. Last week was a Rhodes momentum indicator top out there, and the support level is between 22 on 99 and 23.69. If we take a look at the daily time frame, we have mentioned a new profile that is attempting to form. Looks like this new profile has expanded. Maybe it has, maybe it hasn't. And right now, it looks to me like it has, but right now what you've got is support on a day. So now this profile, this is important to take a look at. You know, I don't know how easy it is for you to see it here. Let me see if, can I do that on another chart? Give me a second here, folks, just to take a look. GC. Q24. So I want to just simply change the screens. Yeah. So here's an interesting thing. So we'll change screens. We're going to go over to, it's just going to be easier, and we'll come back to this set of charts here momentarily. But I did notice something that's worthwhile for me to pass on to you, and that's on the black background screen out here. What I'm actually going to do is I'm going to turn off price. So I'm going to get rid of the noise. That's why I switched over to this set of charts out here. Of course, we do have the markets opening, so lots of calculations going on in my entire system, and it's going to slow things down just a tad. But if you take a look at this new profile, and this new profile I can definitely say is attempting to form out here, and that new profile just simply has a bottom now. That bottom and the center are at the exact same areas. That's 23.6150. The point that I really want to make, let me get to the point first. If you take a look at this current profile, if this comes to fruition out there, and I won't know till 6 o'clock at night, but if it does come to fruition, this profile is formed within the prior profile. That is a signal to expect or anticipate some type of sideways consolidation when we take a look at gold. Is that consolidation inside the prior profile, or is it just inside the newer profile? I don't know. But what it does say is that we do have odds favor that what gold is likely to do is ready to consolidate out there. So that's its message. That's assuming that that new profile comes into play out there. So now let me just simply switch back to the white background charts. We can bisect and dissect and take a look at additional levels of support or resistance or whatever it is that comes up. Here you can also see you've got breakout support. So let's say gold closed below 23.61. Price has been pulling back. It did find support there. But then where would price head to next? That'd be a 23.2270. That's its daily TD9 count breakout area. And if price could clear 2400 even, Stephen, then you'd be looking for a move up to about the 2412 area. That's its daily oscillator and change line. That's what's going on the daily. You also, John, I know we're interested in the 5-hour time frame chart. So let's pull that out. What do we see here? On a 5-hour time frame, gold formed a TD9 count bottom. Now, what price has done here over the last 10 hours or so, so let's see, I'm talking about the candle session that ended at 9. The one that we're currently in ends at 2 p.m. But what we can see out here, and I'll just simply draw in a horizontal line out there, what price also did, we talked about this earlier, not about gold, but about the U.S. dollar index, as price has gotten back, test and reject that profile. This is on a 5-hour, the swing point, I should say. That's on a 5-hour time frame chart. John, that ran from a low of 23.4870 to a high of 23.5860. So we've got the test and rejection of that swing point, and now what we've got is price testing oscillator and change line resistance, and that level is at 23.68. Call it 23.69. If price closes above 23.69, you then should see a move up to profile resistance. That's the bottom of its profile. That's the old support that can become new resistance. That's at 23.7570. So those are the numbers in the 5-hour time frame for you to focus on and pay attention. Of course, if price did close below that swing point from 11 o'clock, that was on May 23rd, and that low is 23.4870. You would trigger an A to B equals CD pattern to the downside out there, and that's what the 5-hour time frame chart shows. Do I have anything else out here worth paying attention to? Well, there is a potential of a hourly TD9 count bottom out there. In order for that to unfold, you need to see a close. That's a close here at 10 o'clock. That close would need to be below 23.6850. 23.6850 out there. So if you get it close below that, you'll have a TD9 count pattern that will confirm, and that pattern will complete at the 11 o'clock time frame out there. So that's on the 60-minute chart. If we take a look at a 30-minute time frame chart out here, the 30-minute time frame chart has just confirmed a Rhodes momentum indicator bottom. Here you've also got a new profile. So we take a look at Goldilocks, 23.7020 is going to be the next key area to watch. If price closes above that, that would tell us about a potential move to the 23.84 level. But of course, we have to respect, what do we have to respect? I can't remember what we have to respect, but if price get up to 23.84, then you could get up to the top of that profile at the 2400 level out there. So we've given you a number of different charts to watch. Each of them have somewhat different signals, but really the 5-hour chart has a test and rejection of a swing point, and if it can clear that oscillator and change line, then that adds the idea of the 30-minute chart out there. If it can clear, moving higher, if it can clear 23.7020, then it should head higher. And then it really doesn't matter whether or not the 60-minute confirms a TD9 count bottom or not. I was just sharing with you the patterns that were present out there for it. So that's what I see when I take a look at Goldilocks. Hopefully that was a good summation of what it is doing for both Hector and John. John also wanted to take a look at the 30-year Treasury. So let's go take a look at its charts. I'm going to go ahead and close up these gold charts just to free up some resources. It's going to take us to that other gold and silver and GDX chart out there. So let's just stay with this for a moment, and then I'll go over to the 30-year Treasury charts. We take a look at silver. Silver has a daily Rhodes momentum indicator top. So it's got resistance out here at the level of 32.72. If price were to close above that, that would be a bullish outcome. Price is trading above profile resistance, and it's trading above its green oscillator and change line. So even though on a daily basis we have a top, its signal is quite frankly neutral. In the case of the GDX out here, it is consolidating with inside its profiles. Support is at 34.95, resistance at 37.19 out there. Nothing really else for me to show. So what I'm going to do here is 9:38. We're going to a break. I'm going to go ahead and queue up those 30-minute Treasury charts out here, and we'll take a look at that when we get back from this break.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You got the Dow down 371, S&P's off 42, NASDAQ's off 144, Russell's down 26. I am coming to you live. It's 9:42. If you are listening at the normal programming time, I'll be back to the normal show time tomorrow at 11 o'clock come tomorrow. But right now, we're taking a look at the 30-year Treasury out here. 30-year Treasury printed out at 114. 30 out here. Let's take a look at what's going on some of its chart patterns. So first, let's begin with the daily time frame. The daily yesterday closed below the bottom of its daily profile. That bottom of the profile right around the 116.02 area, 116.03 level. That suggests a further retracement out there. Further retracement to where? Well, one of the price targets would be its swing point, and that's the swing point from back on April the 25th. The high of that swing is at 114.03. If we take a look at the weekly time frame chart, the weekly time frame chart shows that price is trading into its buy zone. The buy zone is between the range of 113.25 up to 115.02. We are trading below that 115.02 area, so that 113.25 may be the one that comes to fruition. Now let's look at the intraday charts. Let's open up the 30-minute chart. Much like I believe we took a look at inside of, I forget what instrument we might have been, gold or what have you. Really the same kind of pattern here, or maybe that was the ES Mini we were looking at. Yes, it was the ES Mini. If we take a look at the 30-year Treasury, we can see that since the time frame of about 5 in the morning on May the 28th. So again, yeah, this is following along with what we looked at on the ES Mini. We have not seen a close above profile resistance out here. You are in bar number 8 right now. That suggests that you could get a TD9 count bottom that forms between 9 and 10 this morning. If you do get that rally, it'd be nice if you had those profile levels out there to try to understand what's going on. Let me give them to you right now, at least the ones that are in place out here. The first one that price, if it were to rally, would be that you'd be taking a look at would be a 115.12. The next one would be about 115.19. And then above that, you'd be looking at 115.21. I am not saying that's where price is headed to. It would be a close above that 115.21 level, though. If that's the profile that's in place, that would suggest that you've got some further rally going on as that pattern will have changed. That's the 30-minute chart. I don't see any kind of a bottom signal out here on a 60-minute chart, nor do I on the 120. You are in bar number 9 on a 4-hour time frame chart, bar number 7 on the 5-hour time frame chart, so we don't need to really focus in on that. But with regard to the 4-hour time frame, price is also trading below a breakout level, 115.04. So, and you've got an A to B equals CD pattern to the downside. So what you'd be looking for here on a 240-minute time frame chart would either be a confirmed wave TD9 count bottom or a bullish reversal candle to confirm a Gartley buy pattern. Short of that, price is likely to head lower. So that's what I see, Mr. Z. When I take a look at those 30-year Treasury charts, it does look like to me that this wants even further lows, and I would say the bottom of that weekly profile becomes a pretty gosh darn good target around the 113.23 area. So I hope that helps you out as well. We did have another request that came in. That's a wonderful thing, and it was from Tom D., and he would like to take a look at Abbott Labs. So I'm going to close out these charts here right now, Tom, and it's going to take just a moment for that to unfold, and then we'll go take a look at the Abbott Lab charts. We'll take a look at the daily, the weekly, and the monthly chart out there and get a feel for what it's signaling to us. Now, when I popped them up on the screen earlier, and I'll be up here momentarily, it looked to me like this wants lower price. And how does Stevie come to that conclusion out here? If I look at the daily, well, if I look at the weekly time frame, that's really where I went first. What I noticed out here, Tom, and that is that I'm going to try to open up this chart. Let's do it this way. And so if we take a look at the weekly time frame, now the week is not over, but this is trading below its TD9 count bottom, and this formed last week. Now, I do not know whether price is going to close below that low. That low is at 102.41. Now, if you do get a Friday close below 102.41, this will not have even stopped for a second on its TD9 count. See the TD9 count up here on the weekly time frame at its high? That was back on January 12th. At least that led to a sideways move for 1, 2, 3, 4, 5 weeks before then price went ahead and took off to the top side out there. In this case here, if you close below that low, again, that low that we're taking a look at is 102.41, this TD9 count pattern will have failed immediately. The last TD9 count bottom for Abbott on a weekly basis was back here on October 13th of 2023, and price took off to the upside immediately. This here is the opposite of that pattern, but again, it's only Wednesday. But it closed below this on Friday. That's going to tell us that price should go target 92.43. So that's going to be the most important chart, I believe, for you to be paying attention to get a good intermediate term feel for where price might head to. Now, the monthly chart, which doesn't have any kind of a topping pattern or anything, it is trading with inside its profile, Tom. And so it does have a bullish structured profile. It's a fairly decent buy zone, and that buy zone is between 92.29 and 100.13. And I'm taking a guess that based upon your message that you're looking to enter a long position inside of Abbott. So keep an eye on that weekly time frame chart. You could find support around 100.13 or somewhere in between that 92.29 and 100. What you'd be looking for there on a daily time frame would be some kind of bottoming pattern. So now let's finally get to the daily time frame. What do we have here? What we have here is a failed TD9 count bottom. Now that took about 4 days for that to unfold out here. You've got a Rhodes momentum indicator signal. That would require a bullish reversal candle to confirm a bottom. Well, that already took place out here, Tom, and that was on May 22nd, so just a few days ago. And then price never even closed above or even tried to trade above its high. Price was still below profile resistance. By the way, daily profile resistance are at the following levels: 105.45, 106.36, and 106.97. And the final resistance level on a daily time frame, which would be its breakdown area, that's at 108.19. So you would need at least a bottom pattern on the daily time frame as price is pulling back into that intermediate or that monthly buy zone out there. But boy, you'd sure like to see something take place on the weekly chart as well, at least at this stage, because it looks like it may negate that TD9 count bottom. So here's what I can share with you right now, Tom. I don't know when the next bullish reversal candle is going to form on the daily time frame. But the next time that you see that, because I don't know that I'll be monitoring Abbott Labs, but should you see that or you have a question about that, please write back to me. Right now I'm just doing that show between 9 and 10 because of some other obligations out there. So, listen in on the 11 to 12 show or go ahead and get an archive. And, you can feel free to send me back another request to take a look at Abbott Labs at any point in time. But that's what I see when I take a look at it right now. So I hope that helped you out with regard to that information. Now, I'm just going to check my email, see if there's any other requests that have come in. I don't believe there's anything inside the Tiger's Den. I'll take a quick peek here, and then we can figure out where it is that we want to go to. So nothing that I see there. So let's see. What do we have? Let's go back to let's do this here. I said we take a look at the DAX, so we're going to go take a look at the DAX because that'll give us a decent feel for what the NQ may be intending to do today because of its directional correlations. So momentarily, I will get back to the DAX. Wow, I've got a lot of charts here. I need to maybe try to clean something up. So when we take a look at the DAX out here, the DAX over the left-hand side, you can actually see the DAX and the NQ out here. So the DAX right now is trading below a hammer candle that formed back here on the trading day of May the 24th out there. And that low out there is at 18,515. If you close below that, that suggests that we had lower out there. Now, I don't know that there's an A to B equals CD pattern to the downside. That retracement here on this rally high yesterday negates that signal out there. But the weekly chart shows that prices right now trading below its oscillator and change line. We come back from this break, we'll finish taking a look at these charts. We're going to see what the NQ charts are suggesting as well.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So we're taking a look at the DAX and the NASDAQ via the NQ futures contract out here. So we know the DAX is trading below the bottom of that hammer candle for May 24th for its daily time frame. There's an expression out there. If you close below the low of a hammer candle, if you're long, you're wrong out there. So watch that low at 18,515. We can see on a weekly chart, prices trading below that oscillator and change line. We have had basically since the lows of last October, we've had a couple of one-hit wonders, 1 week wonders where price, actually there was a 2-week close below this, and then we saw a bounce out there. I don't have the day we had the week we had the bounce was on April the 26th. Nonetheless, closing below that oscillator and change line would tell us that prices lost its momentum. The NQ would form a sell the D point pattern today if we get a bearish reversal candle. Right now we've got a bearish engulfing candle, but price would also need to close below that oscillator and change line. So the DAX or the NQ is stronger than DAX, we can say, with regard to its chart patterns. 18,736 would be an area of potential support, and on the weekly time frame it's at about 18,796. Now let's go take a quick peek at the intraday charts here for the NQ, see what kind of signals, if anything, they are generating for us, just simply to leave you with the play-by-play as to what's happening right now. And here, with regard to the NQ, if we take a look at the 15-minute chart, you've got a Rhodes Momentum Indicator bottom. Watch 18,875. That's your resistance level. You've got the same pattern on the 30-minute time frame. 18,888 is its number. That price would likely get to if price closes. Remember, we talked about the 30-minute profiles out here, and we hadn't seen closes above the top of a profile. Right now, that is a pattern that is unfolding, 18,842. So you've got another 3 minutes out here, 3.5 minutes. If price closes above at 10 on a 30-minute basis, if price closes above 18,843, if price closes above that, you're likely going to get up to the 18,888 level out there. That would be the area of resistance out there, and that would also change the character of the NQ, at least with regard to its inability to have closed above profile resistance for its 30-minute time frame. Folks, stay tuned. Basil Chapman is up next. Of course, you're listening at 11 o'clock. Listen in to all the great programming that we've got for you, and I will be back tomorrow at the normal time, 11 o'clock sharp. Been great to join you here at 9 to 10. Have a wonderful Wednesday, folks. We'll see you on Terrific Thursday. Take care.